Thank God it's Friday, and yes, you guessed right. It's time to do 55 minutes of current and relevant business talk. That's what we do on Business Morning. I'm Ini John Meko, and we start off from the global space as usual, telling you what's happening with global oil prices. Well, crude prices spared gains from the previous session and fell nearly $2 today, Friday, after the White House delayed a decision on U.S. involvement in the Israel-Iran conflict. But they're still poised for a third straight week in the black. So we see Brent for this morning lost $1.89. That's about 2.4%. $76.96 a barrel. WTI is on the flip side. We see it's gained 0.7% to $75.67. So we continuously see the closing of the gap between Brent and WTI. Normally, we would see like a $4 difference, but with all of the volatility that has been going on globally, we've seen that gap begin to close, and mostly because the United States is a major contributor of that volatility, from the trade war to also, of course, they are a major factor in the Israel-Iran war. Whatever the president of the United States says moves the market. So we see that gap between both of them closing. Brent features trimmed previous session gains following that White House comment that President Donald Trump will decide whether the U.S. will get involved in the Israel-Iran conflict in the next 2 weeks. Remember that Iran is the third largest producer among members of the Organization of the Petroleum Exporting Countries, and that's OPEC, extracting about 3.3 million barrels per day of crude, about 18 million to 21 million barrels per day of oil and oil products move through the Strait of Hormuz along Iran's southern coast. And there's widespread concern that the fighting could disrupt trade flows in a blow to supply. So these are the worries and the considerations that's driving the market in the oil space. Back here in Nigeria, the country's third sovereign green bond has been oversubscribed by 183%, with investors putting in 91.42 billion naira against the 50 billion naira on offer. According to the Debt Management Office, a total of 47.36 billion naira was allotted to an interest rate of 18.97% per annum. The funds will go towards climate-related projects in the 2024 budget, supporting Nigeria's net zero emissions target by 2060. The DMO says that the huge demand signals rising investor interest in sustainable finance and marks another step towards deepening the domestic capital market. And now the banks in the country have cleared about 95%. That equals to 170 billion naira of the 180 billion naira debt owed to telecommunication companies since 2019. This was made known by the chairman of the Association of Licensed Telecommunication Operators of Nigeria, Alton, Mr. Benga Debayo, during a meeting in Lagos. Well, Alton chairman explains that although only 3 banks are left to pay the balance of the debt, this development signals a vital step towards resolving a 5-year standoff that has threatened mobile banking services, which is a crucial channel for millions of Nigerians, particularly in rural areas with limited internet access. His comment comes a day after Alton announced the rollout of a new billing model which allows telecom operators to deduct the standard of 6 naira 98 kobo per 120-second USSD session directly from users' airtime balances rather than through the bank account. So hopefully the issue of banks owing telecoms would be over after this debt is paid. Pension fund operators and administrators, alongside the Commission's head of compliance, have shared updates on the pension fund, including its efforts to clear backlog owed pensioners before now. The current status, they say, is that payment has been done up to March 2025. This was disclosed to journalists in Lagos, where the Director General, Molola Oloworanran, says that it's a new dawn for pension administration in the country. The second quarter PenCom press conference is a platform to review its work so far in 2025, which includes strategic sessions that should lead to efficient use of pension funds. The Director General believes that work begins only after the backlog of payment has been achieved.
Effective June this month, total monthly pension payments under the Contributory Pension Scheme, the CPS, will increase from 8.3 billion naira to 11.9 billion naira, directly benefiting over 233,000 retirees, depending on their pension account balances.
Sustaining the trust, PenCom says it has introduced some new ways to handle the administration of funds.
We are establishing a pension legislature working group that will partner with legislators to institutionalize reforms, which we believe is key and very important. 3, diversification of pension assets. We are revamping the investment regulation to expand into other alternative assets, and also increasing limits for the alternative assets pension funds can currently invest in. Micro-pensions revolution. This has now been renamed as the Personal Pension Plan. It's been re-engineered for scale, technology enablement, and deep penetration into the informal sector. Effective immediately, PenCom has launched an uncompromising compliance drive to ensure the Pension Reform Act is complied with by every operator.
The Commission is warning that non-compliance to its act will be met with set consequences without compromise. All right, now let's talk about telecoms. We talked about how Alton says most of those debts have been cleared, 90% or so. So it's good news, and it's a new era. USS discharged directly from your airtime. So we shouldn't hear, this backlog and all. But the other thing is, since that increase of tariffs, a lot of people have been asking, so what are the telecoms doing with that money? What have we seen? Well, Airtel Nigeria is here to tell us their story of how they're handling that money. We have the director, Airtel Business, Ogo Fomata, right here in the studio. Hi, Ogo. Good morning and welcome to the program.
Good morning. Thanks for having me, Ini.
Good to have you. So I wanted to say, where is our money? But then... So, I mean, you got the increase, the tariff increase that you asked for, and people are curious. When do we see the improvement in the quality of service that you promised will come alongside that tariff increase?
Okay. Thanks, Ini. I mean, we are currently upgrading our network infrastructure. You talk about improvements. Improvements will come. It's a rollout process, So we're doing a lot of things, and this is why I'm here this morning to share, with our customers, with Nigerians, what we're doing in terms of the upgrading of our infrastructure. And we're doing it in a lot of ways. We're doing site upgrades. And when I say site upgrades, we're upgrading all our sites from 4G, from all our sites to 4G, and we're adding more 5G sites. And that is one of the things we're doing because we are talking about coverage. We're also going to expand the capacity at these sites, so we will deploy more microwave, high-capacity microwave frequencies, and that increases capacity at each of these sites. So just a few of the things we're doing.
So, when you say some of these things, the telecom sector can be really technical. I just wanted to remind you, you're not talking.
Okay.
So a lot of people who are listening just want to know. So I just want to pick up my call and do my transactions and do my calls. So when you talk of all of this, sometimes it's kind of technical. So could you tell us what this really means to the customer in a layman's language?
Okay. So superior technology enables you to get data quality data, quality voice in a more cost-effective manner. So when I say we're upgrading all our sites to ensure that all our sites across Nigeria are 4G, it's to deploy that superior technology. And of course, some sites, we would put 5G rollout as well. Now, okay, let's bring it down. I want to do what you've asked. You know, when we talk about, oh, is the speed good? This will make your speed good. This will make your service available. This will improve the access that you have to the network. And you know, there's some applications that need less lag. We would provide that with these upgrades.
So that's why we hear Airtel is doubling investment, bringing in equipment. So this is what you have been using our money for.
Precisely, Ini. And you know, doubling investment is not just about infrastructure. It's about stitching together that ecosystem that enables the digital future of Nigerians.
And I know you mentioned expansion, because we keep talking about financial inclusion, but a lot of people still say how you can go to some areas in the country and you cannot use some networks.
So this expansion is part of that process to enable us have more sites. Now, having more sites means better access. Having more sites means there will be network availability. Now, we're also deploying more fiber kilometers. We're fixing damaged fiber and we're deploying more. Now, what that does is it increases the capacity at each site. So again, sometimes there is no network, maybe because of congestion. We're going to reduce that when we add more sites.
So you also have the issue about data centers and data coverage. Is that part of what the sites will be giving?
So yes, the sites would give us more data, access to more data, better quality voice. Now, when we talk about data centers is, you know, this data that we're putting in more sites needs somewhere to process them. People talk about AI. You need somewhere to process the data and the compute power required for all of these data that we're processing. And that's why we're putting in data centers.
And you promised us cost-effective service. You did mention that.
Yes, I did. Yes, I did. And, you know, when you use a superior technology, things are cheaper. It may not seem like that, but the fact is, this deployment, this investment is a lot. But because the technology is more advanced, it's somewhat more cheap. It's cheaper, you know, and therefore...
Is it because of the quantity, the numbers bring down the...
Yes. So that expansion increases the data that is available. For instance, we're just talking data, yes? It increases the data that is available at a site, which means more people can use it, and therefore the unitary economics is much better.
And also innovative customer-focused solutions. Any new innovation, or is it just a normal call and send messages and all?
No, so we recently launched the Spam AI Alert. You know, and I think that you don't even need to do anything if you're on the Airtel network for it to block spam messages. And that's some new innovation that we've just launched recently. And people already see that they're getting less spam messages. And you know how you and I may say, oh, well, I don't really need it because I don't click anything. But everybody is not at the same level of understanding. So there is that measure of trust that if something comes into my phone, I'll click on it.
Would that be for the message, a mail, or the...
It's for SMS, okay. the Spam AI Alert. And we've also deployed a new network tool. So you talked about innovation. So this new network tool enables us to see the pockets where service is not so good, and then we can provide service there.
And talking about the expansion going to the rural areas, I think some telecoms are now doing things in our local languages as a way of financial inclusion.
Yes, yes, and as a way of also communicating to our customers, speaking the language that our customers understand. And when you talk about rural areas, it's something that is near and dear to our heart because today we cover about 84, 85% of the population. So this investment is also to expand coverage to the other 15%. And the rural areas, we have recently launched, we announced a partnership with Starlink. Starlink is low Earth orbit, and I'm sure you know. We also have partnership with OneWeb. So these are satellite service providers that we will partner with to provide service in the rural areas. This is, of course, beyond the sites that we're expanding, beyond the fiber that we're expanding as well.
So do we have a timeline to when customers can say, oh yeah, Airtel, your network is now, better because of these promises that you have made?
You should have started seeing that already. I mean, we made these promises, I think, 18 months ago. And yes, we recently got the tariff adjustment, and we have started.
Hike, but adjustment. That's so nice.
Thanks for noticing that, because indeed it is an adjustment. But we have started, and that's at the center of what we do to provide service that is accessible, that is affordable to Nigerians.
And innovative products.
Yes.
That are customer focused.
Yes, yes.
So I attended the forum where Airtel and all the other major telecoms attended, and this issue of the price adjustment, the conversation there was, it's a regulated sector. Why do we have to go through all the drama? I wonder if that conversation is still holding.
It is still holding, and the good thing is that our regulator is close to us. We're close to our regulator. We have various touch points. We have to hold these conversations. Regulation, yes, is good, it's necessary, but we also need to take the economic realities into consideration.
Yeah, and then balance it out with the customers.
Oh, yes, definitely. And then one of the things that we're also doing is a self-service platform that enables our customers pick and choose the service bundles that they want, because we're all at different levels of, economics. So if you want different services, you can get them even without calling anybody, just by going to our self-service apps.
And talking about bundles, do you have any? I know then I was told that you have to maybe bring up a bundle, whatever plan you have, and get approval. I wonder if you have any new ones.
No, so we have approvals from our regulator to do the bundles, but there's something that the regulator did recently, and which was to streamline, the bundles so that it's easy to understand. You can't have 1,000 bundles. Just, create pockets of that so that people can easily understand what bundle they want to purchase, for how long, and for how much.
And for different groups, I know there's some for students.
Yes, definitely.
For the informal sector, for the big guys.
Yes.
And all of that.
It's still there. It's still there.
Okay, just, a little of change, because...
Just when you say change, it's more like consolidation of plans and bundles. So whereas you may have had, like I said earlier, 1,000, today you have 7. And it fits the needs of all of the different segments and sectors of the economy.
All right, any final thoughts?
No.
For your
Thank
for
you
your
so
customers.
much. Thank you, Ini, for having me and for giving us at Airtel the opportunity to talk about these investments. And the reason why we're doubling it is because we see a future in Nigeria. Nigeria has the largest population in West Africa, and that is something that we are totally into, to ensure that we provide that platform for Nigerians to have a better future. So thank you.
All right, well, it's good to have you, and I'm sure your customers out there are, as you said, already experiencing the investment profits, benefits, but looking forward to more. Thank you so much, Ogo Ofumata, Director, Airtel Business. Thank you so much for your time.
Thank you, Ini. Thanks.
All right, now let's take a break. When we come back, of course, we do have other conversations. Please stay with us. welcome back. It's still Business Morning right here on Channels Television, and we're going to the oil and gas sector now. Since that announcement by Dangote Refinery of their intention to begin distribution of petrol and diesel from August 15, there's been a lot of reaction following that. So let's delve into some of this reaction and perhaps try to find a balance in between the pros and the cons of it. Now we're having this conversation with the Chief Executive Officer of RTC Advisory Services Limited, Mr. Kwemi Agbaje. Mr. Agbaje, good morning and welcome to the program.
Good morning. My pleasure to be here.
Great to have you. So I wonder where you stand in this plan by Dangote to go into the distribution of petrol and diesel. What's your first impression of it?
Okay, I've thought carefully about this issue because I'm somebody who cares a lot about competition and free markets. And I have struggled to identify anything that Dangote has done, Dangote Refinery has done, that can be regarded as anti-competitive. Quite frankly, so what has Dangote done? They've changed their fleet. First of all, they want to take charge of their distribution. Now, that's not unusual at all in Nigeria's industrial sector. I'm sure if you check, at least 50% of our FMCGs and manufacturing entities, they take control of their distribution. They have trucks, they have distributors all over the country. They take the goods to those distributors. And they don't charge for it because they're bringing their goods. It's their own goods that they're bringing to the doorsteps of their retail chain. Now, and then what else? They bought 4,000 CNG trucks. They saw an opportunity to reduce the cost of transportation and distribution of their goods. And they've invested in that distribution capacity, adopting something that we all became aware of at least 2 years ago, in the light of the deregulation and the removal of the fuel subsidy. And so they've adopted a more cost-efficient model using CNG trucks. Quite frankly, all I see the company having done or trying to do is to improve their efficiency and to take their distribution, to lower their cost of distribution and to take their goods directly to the retail segment. Now, is there anything Dangote has done that their competitors cannot do? Is it impossible for them to embrace the CNG in doing their own distribution? No. Is it wrong for them to also adopt a model of taking goods to their retailers? Absolutely not. So like I said, I'm somebody who I've even served in the competition committee of the Nigerian Bar Association many years ago. I've been very interested in the issue of competition. But in this case, I do not see anything that Dangote has done that I would regard as anti-competitive or that is not available to their competitors.
So what about the talk of those who are currently carrying out this job will be left without jobs? What about that, the threat?
I don't see, quite frankly, look, who is the beneficiary? Markets exist for multiple stakeholders. Who is the ultimate beneficiary of these initiatives that Dangote Refinery is embarking on? I think that would be the ultimate test for me. The ultimate beneficiary is the consumer. These measures will lower the cost, they will drastically shrink the cost of distribution in the industry, and that benefit will go to the consumer, to the economy. That benefit will go to offsetting some of the inflationary spiral attributable to cost of distribution of petroleum products. It will reduce general trend towards inflation. It will make the product more available. Those are benefits that one finds difficult to argue that we should deny the consumer in order to protect another segment of the retail chain. In any event, I'm not persuaded that there's any segment of the retail chain, those you refer to, who cannot reorganize themselves and adopt similar tax strategies, change their own vehicles to CNG. In any event, they would even have lower conversion costs to CNG. They may be doing a few trucks. Dangote has done 4,000. So I'm not persuaded that those people, if they are willing to compete and they want to adopt innovation and efficiency mindset, I think every other stakeholder can take similar steps. And in the end, we would have a more competitive downstream petroleum sector. The value chain will be better developed and the products will be more available and cheaper for everybody.
So Petrol is scared that some petrol stations may not be able to withstand. No, I know you said that, well, they can also engage in similar transactions, but, they may not have the stance to be able to carry that kind of a burden. And so that is tending towards monopoly and might get some petrol stations to actually shut down. I wonder how real you think that threat is.
I don't know. Maybe we read the model Dangote announced differently. I've read carefully all the literature around that model, and I actually think far-flung petrol stations that are isolated and far locations may actually be a beneficiary of this new model. They can then forgo the cost of distribution that they were incurring themselves, register with Dangote, receive product directly on their own location, and then just stay focused on doing their own business, which is selling the product. I do not see how a petrol station in Mokwa or in Ogbomoso or in Biu or any part of the country that wants to take advantage of this new model advocated by Dangote, I don't see what they have to lose. I think that it looks to me, and I restate this fact, I'm somebody who has always been very averse to the risk of monopoly. I've written about it, I've spoken about it, I've served in committees doing that work. And I think that the mindset when you are worrying about monopolies is usually what does it do to prices? Monopolies tend to raise prices. Monopolies tend to increase inefficiency. Monopolies tend to harm the consumer. In this case, all that is happening is the reverse of those negative consequences of monopolies. Efficiencies are being introduced, prices are being reduced, availability is being increased. And I'm not persuaded that in the medium to longer term, that will be the consequence. Instead, what I see in the medium to longer term is even a more competitive market, a more efficient market, everybody updating their systems and models to adopt similar efficiencies to the benefit of the industry and to the benefit of the consumer.
Yeah, and I'm glad. I'm glad, Mr. Gbaje, that you mentioned.
Into that model.
Yeah, I'm glad that you mentioned, the long term, because I wanted to ask. I mean, the reality is that Dangote may be carrying on more, when it comes to operational costs. Is this sustainable? Do you see this as being sustainable, or you think it's just, for maybe a couple of months or so?
Look, when a company invests in 4,000 trucks, adopting a technology that we all became aware of. Everybody became aware of CNG at the same time. And this is a company that has first built. So first of all, Dangote has scale. They have a bigger scale. That's the real threat to their competitors. They have larger scale. They have larger production volumes. But they then take the additional measure, for good reason, of taking control of their distribution network. Just like, I don't want to mention names, I could mention 10 large manufacturing companies in Nigeria who have taken control from inception of their distribution. and who have bought those trucks, who take their products from Lagos to Ibadan, who take it to Benin, who take it to Port Harcourt, who take it to wherever in the country their wholesalers, distributors, and retailers are. That's not unusual, I have to point out, in manufacturing, in the industrial sector in Nigeria, and all over the world. That's very unusual. I mean, it's not unusual at all. It's very normal. So I think it's sustainable. I think the company has made significant investments, huge investments in this initiative. I think the strategic benefits to them are clear. They absorb some margins that they eliminate due to all of the cost reduction they seek to achieve, and increase the availability of the product. I, as an industry analyst, expect their competition to react, not to ask that we forego the benefits of these cost reductions simply because of a short-term need to protect people who are perhaps unable or perhaps unwilling to take similar measures, and which I think, as I've said, if you're a smaller player, you have 3 trucks, 5 trucks, you're only required to convert 3 or 5 trucks to CNG. It's not on the scale of the investment that a Dangote has undertaken in buying 4,000 new CNG trucks. So my sense is that these are the initial resistance based on a shock, a competitive shock. But I think that when people settle down, evaluate the model, evaluate the circumstances, they would respond, and they would respond to create better industry efficiencies across board, to the ultimate benefits of the industry and the consumers.
Mr. Agbaje, what do we call this model, though?
Well, I mean, we should ask Dangote, but maybe they are calling it a direct distribution model. A direct distribution model. They were, if you look at the former model, I'm convinced, by the way, that Dangote never intended to use that former model for the long term. I would take it that they just started with that model while they procured all these trucks and put all these arrangements in place. But it's clear to me that their ultimate destination was a direct distribution model. And then the sweetener then became CNG, which could divide or reduce the cost by 75% or so. So yeah, it's a direct distribution model. If you go to ask many other manufacturers, you would find that it's probably not unusual.
And using a CNG to distribute fossil fuel, that is another interesting part of it, I guess.
Absolutely. So that and what it does to the cost structure is superlative. How can I argue that a company should not radically restructure its cost structure when there's an opportunity to do so? We all saw the CNG initiative, and one of the things we've observed is that the transporters who have done CNG have not fully availed the market of the benefit. So if Dangote, for instance, said, let me outsource my distribution, but stipulate that everybody must use CNG, how are you sure these distributors will now sell at the prices desired by Dangote? Distributors will absorb the cost savings, may absorb the cost savings of the CNG, and still sell at the prices that they used to sell. Therefore, they are the ones fully absorbing that benefit and denying Dangote of maybe the larger volumes and the larger sales that it desires by adopting model. So when it takes the whole destiny into its hands, it takes its sales distribution into its hands, it can be assured that the cost savings are passed to the customer and the volume targets it has set for itself are achieved. I challenge the competitors, all of them, whether a depot owner, a truck distributor, to adopt similar measures. Go CNG as well. Take control of your own distribution as well, so that the efficiencies can accrue to those of us, the consumers, and to the economy.
All right, Mr. Agbaje, I'm sure once it's connected to the benefit of the consumer, a lot of applause will follow. But thank you so much for your time. Chief Executive Officer of RTC Advisory Services Limited, Mr. Opeyemi Agbaje.
Thank you very much.
All right, we're still staying around that, the issue of petroleum products in the country, even though not directly connected to the distribution. But recently, we told you how Petrol endorsed petroleumprice.ng, and we had that conversation right here. But now let's talk about the chief executive officer of that Petroleum Price NG. So we understand the essence of it and how it could affect us, especially at this time when the price of oil globally is volatile. We have the chief executive right here, Mr. Jeremiah Olatide. Mr. Olatide, good morning and welcome to the program.
Yeah, thank you so much for having me.
Yeah, so when Petron discussed this, when we had this conversation on the program, we spoke to the national president of Petron. And I'm like, so what do we need this petroleumprice.ng? We follow the global price. This is not Naira. It doesn't move that fast, you understand?
Yeah.
So what's the essence, of having a website where we see the petrol price and all of that?
Oh, thank you so much for having me once again. And for us at petroleumprice.ng, we've been around for over a decade, and we realized...
This is the website, because we just heard of the website.
Yes, yes. We've, as an industry expert, have been around for over a decade, and we've been able to identify some problems relating to pricing, because pricing is a national issue. Petroleum price is a national issue in Nigeria, and we realized that pricing weren't fair, pricing weren't transparent, and we need to do more to make pricing transparent. Go to the US, we have gas body where users and those living in the US could track retail prices and make informed decisions. So we thought of it that end users, stakeholders, even the media needs to track prices in real time. We have over 100 depots listed on our platform where we display their prices in real time. It helps retail outlet owners to make informed decisions. It helps depot marketers to make informed decisions. It helps even the end users to make informed decisions in real time.
So the price you display, it's the pump price?
At the moment, we display depot prices.
Okay,
in the next 2 months, we'll be rolling out our platform where users, commuters could have access to station prices across Nigeria.
Okay, so if I want to fill my car now, I can go to the website and check where...
Yes, you could go to the website, track prices. It's going to be linked to the Google map. So while driving, you could say, oh, I want to know the cheapest station in this particular local government. For example, you get the local government, it pops up, you have your clicks, and it takes you there. So it's in the pipeline. But currently, over a year, we've been tracking prices across all refineries and all depots in Nigeria, displaying them in real time, helping lots of stakeholders. Media houses have been quoting our platform for long, and they could make informed decisions on when to buy, where to buy. Petroleum prices are it changes so fast.
Yeah, because I wanted to ask you, at this time, because of the Israel-Iran war, the petrol price now is not stable, obviously. What are those factors that feed into the price that you display? So the price in Nigeria, I want to know what fits into it, insurance and all of that, even though we do have crude here, but I know we use global prices.
Yes, for the local prices here, we all have depots. They display their prices in real time. Sometimes prices could change 3-4 times in a day.
Connected to what's happening globally?
Yes. Okay, now, let's go globally. Currently, we have tension all over, and prices are changing in real time. So as soon as those prices changes, it's influenced petroleum prices in Nigeria, and marketers, importers make informed decisions based on the global prices. And as soon as those decisions are informed, they change their prices at the depot and at their organization. So as soon as they do all of that, those prices are being effected on our platform, enhancing and informing stakeholders to get to see what is happening in real time.
What's the difference between the price at the depot and the pump price? Because the pump price is where a lot of people are interested in.
Yeah.
Is the stakeholders,
Yeah.
in the value chain that want to know what it costs at the depot?
Yeah. Oh, that's a good question. Depot prices are wholesale prices. Station prices are retail prices. As an importer or a refinery, you refine petroleum products, it's being shipped to the depot. The depot is also known as a tank farm or a storage facility where products are being stored and distributed to retail outlets, distributed through trucks to retail outlets. And when those that are retail outlet owners get those products to trucks, definitely they have their margin and it makes up the pump price.
Okay.
So the cost of product at the depot plus the cost of transportation plus their margin makes up the pump price. We have a deregulated market where we all fix our prices based on what we buy and those expenditure that comes with it. So those are the factors that determines prices from the depot to the station.
So now the price, at least as at this morning, Brent,
Yeah.
which is mainly what we deal in
Yeah.
Nigeria, is about $74.
Yeah.
What's the cost? What's the cost at the depot now?
Okay, thank you. For the past 2-3 days, we've had fluctuation in prices. As at yesterday, prices of petrol surged with over a 10%. It was between 875 in Lagos, 875 at the private depot. And because of the surge yesterday, Trump
875 per
liter
oh.
at the depot, private depot.
875 naira.
Yes, yeah, per liter.
Okay.
Yeah. So at the depot, and because of the sudden surge in crude oil prices as of yesterday morning, it moved to 920 across 80 to 90% depots in Lagos. Considering the fact that Dangote, for the last 3 days, has withheld its PFI, they've not sold a liter to the bulk marketers. So those fears, those uncertainties has risen tension, and private marketers and private depot owners, based on the crude oil surge, rose their price to 920, 925 thereabout in Lagos.
At the depot?
At the depot. As I speak
up
with you,
to 900.
as I speak with you now at the moment, the price from petroleum price of NG is 920, 910, 925 in different depots.
Between 920 and 925?
Yes, in different
for
depots.
A liter?
Yes, a liter in Lagos.
So should we be expecting, because that obviously feeds into the pump?
In less than 2 weeks, we'll see pump prices rising to 950, 1,000 naira. But quite frankly, Dangote is now the major determinant when it comes to pricing in recent times because of the refinery power. It controls 50% of the petroleum market. So based on that factor, he has been able to control prices. So because he has not sold petroleum products, precisely PMS, in the last 3 days, it has caused a lot of uncertainty. Some stakeholders are asking, does he want to react to the crude oil price increase? Does he want to increase the price and all of that? So hopefully, I am looking forward to hearing a good news from Dangote today. And as soon as that comes on board, we would know what's happening. But currently, prices are between 900, 910, 920, and 925 across all depots in Nigeria.
Well, that's a scary one. I guess that's why, I think yesterday or so we saw a handful of, queues in some petrol stations.
Yes. As of this morning, I noticed few stations are beginning to jack up their prices. I was at Nimco while coming, and some persons complained that as at yesterday, they were selling 860, and as this morning, they've risen it to 880. And in a few days from now, if the retail outlet owners notice that the price at the depot is stable, definitely they would jack up prices.
So if Dangote, you say he hasn't supplied in 3 days, if Dangote brings in supply, does it do anything to the price? Because Dangote also uses global crude prices.
Yes. You should understand that with the Naira for crude policy, and I am sure he has been receiving between 150,000 barrels per day to 200,000 barrels per day. So he basically has been controlling the PMS price to 825, 830 in the last few weeks. Not minding the fact that crude oil has been fluctuating. So with that Naira for crude policy that has been in effect since April, the renewal, it has helped Dangote stabilize petrol price. But the reason why we're having this surge is basically for two reasons. The first reason is the recent surge in Brent. The second reason is the inability of Dangote to fix price in the last 3 days. If Dangote had come out to say, oh, my hex depot price still remains 835, the tension, the prices will start dropping massively because it sets the pace when it comes to pricing in Nigeria at the moment because it controls truck sales in Nigeria. It does close to 2,000 truck sales daily, and it determines prices at the moment.
All right, thank you so much. I mean, a lot of information you've given to us there, preparing consumers of what may happen to pump price in the next few days. Because if you say at the depot now, prices between 920 and 925, obviously, I mean, retailers want to make profit. So their markup price will be added to that.
Definitely.
And then, well, let's see what Dangote would do.
Thank
you so much for your time. Chief Executive Officer of petroleumprice.ng, Jeremiah Olatide, for your time.
Thank you. It's my pleasure. It's a pleasure to be here. Thank you.
Good to have you. All right, let's get to the global space and see what's happening. We start from Japan, where rice prices more than doubled in May, spiking 101.7% year on year and marking their largest increase in over half a century. The huge spike follows a 98.4% increase in April and a rise of 92.1% year on year in March. Japan's rice prices have been in the spotlight in recent times, with the government releasing emergency stockpiles to moderate the price of the country's staple food. The surge in rice prices comes as Japan's core inflation rate climbed to 3.7% in May, marking the highest level since January 2023. The figure, which strips out costs for fresh food, was higher than the 3.6% expected by economists and is above April's reading of 3.5%. Headline inflation came in at 3.5% lower compared to 3.6% in April, and this marks the 38th straight month that inflation has run above the Bank of Japan's 2% target. The core inflation rate, which strips out prices of both fresh food and energy, is closely monitored by the Bank of Japan. It's climbed to 3.3% from 3% in the month before, and strategists and economists are saying that these are signs that should be considered in the next couple of months. And close there is China. China kept its benchmark lending rate unchanged following sweeping monetary easing measures rolled out last month, and as a trade deal with the U.S. eases some growth concerns. The People's Bank of China had a one-year loan prime rate at 3% and 5-year at 3.5%. Last month, Chinese authorities cut the lending rate for the first time since October by 10 basis points in their bid to cushion the impacts from trade tensions with Washington. A slew of commercial banks also trimmed their deposit rates to protect their net interest margin. LPR, normally charged to bank's best client, is calculated based on survey of dozens of designated commercial banks that submit proposed rates to the central bank. And trade warfares have receded to some extent after U.S. and Chinese trade representatives earlier this month agreed to honor the consensus reached in Geneva in May, allowing for rare earth and tech trade between the two countries while suspending prohibitive levels of tariffs on each other. The trade truce has allowed some breathing space for Beijing to step in to support its currency, while raising hopes that any hit to the economy will be smaller than previously expected. And we go to Germany, where German producer prices decreased by 1.2% year-on-year in May, according to data released by the Federal Statistics Office. The annual decline matched the expectation of analysts who had predicted a 1.2% drop for the month. The data provides insight into manufacturing costs in Europe's largest economy, with producer prices serving as a measure of inflation at the factory gate before products reach consumers. And closely to Germany is France. The manufacturing climate indicator was down to 96 in June, slightly below May's figure, and market forecast of 97, moving further away from its long-term average. This marks the lowest reading since March, mainly due to continued decline in overall orders and foreign orders also, as well as sharp increase in finished good inventories. At the same time, expectations about general production and workforce size remain pessimistic. Personal production prospects also turned slightly negative across subsectors. Business sentiment deteriorated in machinery and equipment goods and other manufacturing, while improved in food products and beverages has remained stable for transport equipment. We go to the UK now, where that government, the government of Britain, has borrowed £17.68 billion in May, exceeding expectations of £17.1 billion. Despite the May overshoot, public borrowing for the first 2 months of the fiscal year remains at £2.9 billion, below the Office for Budget Responsibilities forecast. The current budget deficit, which is critical for the Chancellor's fiscal mandate, reached £12.8 billion in May, slightly below OBR's forecast of 13. Central government expenditure came at £99 billion. That's lower than the expected £99.5 billion, driven by reduced debt interest payments and spending on goods and services. Tax receipts totaled £82.5 billion, marginally below the expectation of £83 billion forecast. Income tax receipts were £0.2 billion. That's above expectation. That's despite a slump in payroll employment during May. The recent rise in gilt yields since March spring statement may lead the OBR to revise its debt interest payments and borrowing forecast upward in the autumn budget. And in Vietnam, the gross domestic products grew 7.6% for the second quarter compared to the same period last year. Vietnam's gross domestic products grew in the second quarter compared to the same period, and this, they say, during a parliament, that the country's annual growth for the first half is hitting estimation. Despite these strong figures, they acknowledge that it will be a big challenge for Vietnam to achieve its 8% growth target for the current year, 2025. The Deputy Prime Minister also said that Vietnam is working to maintain harmonious trade relations with both the United States and China, and the country, which were the country's two largest trade partners. All right, so that's it from the global space. Even though we did not directly talk about President Trump, of course, we still had his influence there. Vietnam and whole other countries still feeling the impact of the tariffs, which seems to be at a pause at this time. I guess that's where we'll leave it for Business Morning today. Thank you so much for being a part of the program. In a couple of hours, I'll be back with Aniti Ede to give you updates from the world of business. Again, that should take us another 55 minutes, and then you have fresh stories for your decision making. I'm Minnie John McQuarrie. I'll talk to you later.